Bill. Let's jump into it. Welcome to the session. We're going to run right about an hour today. It's going to be fun. We're going to do a little bit of technical analysis 101. Hope everybody is up for that. But more before we get to that, I want to talk a little bit about the markets. What's going on? We're kind of in this little quagmire of a market. Jobs numbers came out earlier this morning. Not exactly good, not exactly bad. Reminds me of, what's that childhood fairy tale, just right. We're looking for just right, folks. That's all we need for a little bit of a Santa Claus rally into the year end, but the market is just not getting it. Yes, Roswell Buckeyes. And the Buckeyes rock too. Got robbed by Signetti last weekend. They actually earned that. That was a great game. We'll see what happens here as we get closer to the national championship when it matters. There's Brian Bonarelli with the IU. That Signetti guy, first of all, the Heisman candidate or trophy winner. What a great story. 60 Minutes. Go back and check it. We're going to talk about Best Buy in just a second, Gonzo. But let me first start with the market segment. I am literally going to try to break this up into maybe 10 or 15-minute bites. I want to get into some of the trades that we're going to talk about. One of Brian's from this morning is going to come up as I love the setup here. Zillow is the company you're looking at. We'll go into the technicals on that. But I want to spend 5 or 10 minutes talking about the market, what's going on, and then we'll move along into some of those trades that we're watching and then technical analysis 101. And most importantly, I'm going to leave the last 10, 15, maybe longer up to you in terms of Q&A, because that's really why everybody's here. They want to learn, and I can't teach something unless I know what you're asking about. So I will give you a lot of good, let's say, Q&A on the back end of this. And when we get to that, don't forget to give me some sort of sign in your question. Let's do 2 asterisks. Let's make it so that you have to hold the shift button down. You can't just push 2 numbers. 2 asterisks before any type of question. It's going to help me go up through the stream, and I'm hoping I'm not going to reveal some sort of glitch that is in there. And as Stephen has just pointed out, make certain that you click the link in the chat right now. That's going to get you into the sign up for the holiday trading challenge. This is really cool. You've got an opportunity to win some money. Also, watch over Nate's shoulder for the next 3 days as we have an open house, but it really is an open house on steroids. So make sure that you sign up. Lots of benefits that go with that, including the chance to win some money by showing off your trading skills. So make sure whenever they put that link up there, if you haven't hit it yet, go ahead and hit it. It's going to take you maybe 3 or 4 minutes to sign up, and then we'll see what happens. All right, let's talk a little bit about the markets right now. You know what's great is when I realize that I've done a little bit of a glitch, and I've done it now as I look to share my screen. Here we go. There's our first glitch of the day. Entire screen, boom, boom, share. What we're going to see here popping up is a little bit of the SLX. The reason I was looking at it, this has been one of those sectors that has been resoundingly strong. But I'm going to go over to our old friend, the S&P 500, or in this case, the SPDR ETF. SPY is your ticker symbol here. You're going to note something that if this were a 5-minute chart, Nate would be going bonkers, because it is a spring that is loading right now, getting ready to take off, or it could be a breakdown. The 20-day moving average. And as we go through these, folks, I'm going to try to teach you a couple of my terms that I like to use. You're going to learn about the 20-day moving average and why I watch it, along with the 50-day. But if you look right here, you've got a little confluence, that 20 and 50-day hanging out like they're just walking down the street together. That is giving you a little more strength in terms of what we'd expect on the short term for the S&P 500, and helping us to remain in a little bit of a consolidation and not really just ripping through. Notice how when we broke through that 20-day moving average back here in earlier November, quickly shot right through the 50-day moving average as well. Lots of things going on in the headlines at that point. But when I look at this particular chart, 2 things I'm going to point out is the 20-50-day moving averages are right now in perfect position to give a little bit of support for the market. If we do move through that, that's going to give us a situation where we test those lows that we saw back in November, and that gets us into a little bit of another quagmire as we go into the beginning of the year. Many people think that January is one of the best months of the year for trading. It's a little bit slower because everybody kind of sits on their hands and waits until we get into earnings season. February is normally when you're going to see a little more strength in the market. But nonetheless, right now, as I look at this chart, not only that 20 and 50-day moving average, but this right here you're going to start watching. What is that? Everybody knows. It's volume down at the bottom of the chart. Volume is going to drop off as we get closer to that Christmas and New Year holiday. And what that means is that it's a little bit easier for the market to move around with some volatility. And that is what you should start to be expecting as we head into the last trading days of 2025. A little volatility, a little lack of that, let's call it discipline or that trend playing out. And you can see that that has been the case. This has really been a market that's been in consolidation since October with its highs and lows and bumps all over the place. I blame it on a couple of things, but the number one thing you can always look at is uncertainty. Uncertainty is one of those things that investors hate. Somebody put up their hand if they like uncertainty. I doubt I'm going to see that many hands, except it does do one thing, create volatility. Volatility is a trader's best friend. But when we look at that market indicator, and I'm going to give you the one indicator that I'm looking at right now or watching, the VIX. The VIX right now is acting like there's nothing going on, whistling past the graveyard. Market should be moving a little bit higher with the VIX moving or staying as low as it is. But keep in mind one thing. Just because the VIX is low doesn't mean that the market is in bull mode or that we're trending higher. It just means that everybody's not sitting on the edge of their seat. The VIX is that daily measure of the risk, if you will, of someone selling those options, whether they're calls or puts. Normally we associate them with puts, but when you look at it, the VIX is based off implied volatility. And I don't want to get into a 201 discussion on what's going on with the market, but implied volatility, when you look at the Black-Scholes model, is the one thing that can't be pointed at and said, this is what the value is today. It's the X factor. It's the thing that when things go a little bit wonky, the market makers, we call them the market makers, usually start to jack up the prices of the options because of the unknown, the uncertainty, or the implied volatility. So when the VIX is low, it doesn't necessarily mean that you should be, buying and riding the trends. But when the VIX is popping up and hitting those highs, as we've seen it do here up in those high 20s, it's usually a nice indication that something good is going to happen over the short term. And what I'm going to say to that is that it's basically an oversold situation at that one point. Warren Buffett, his most famous thing that everybody remembers him for is telling us all that we should buy when everybody's selling or the blood is running through the street, and we should be cautious or be selling when everybody's buying. This is one of those indicators, mark it down in the book, that I usually look at and say, okay, what is everybody doing right now? And it only applies to right now. So, hello, Norplim. I'm going to keep trying to move on a little bit, bring it back to the market. That uncertainty in the S&P 500 driving things kind of slowly to the side. The NASDAQ 100 also kind of doing a little bit of the same, the QQQ. Google has been outperforming everybody right now, but when you look at the rest of the Mag 7, it's really been lackluster. Some of those bigger names, Palantir that everybody watches, one of the great speculation stocks out there, kind of lost its way here. And of course, NVIDIA. Good news doesn't appear to be good news, whether it's earnings, whether it's the new news of chip sales in China being opened back up again. NVIDIA has fallen into a completely different state. Let's look at those three stocks real quickly because they give you a great view of that market. I mentioned Google, and look at the trend in the 50 and 20-day moving average. Those are the two, as we get into the conversation on technical analysis, that I'm going to lean on the most here. In this case, both of those trend lines in a bullish pattern. I'll give you an interesting fact about the 50-day in just a couple of minutes here. But both of those in a bullish pattern telling me that this stock really is friendly when it comes to the trend, right? Let's click over and look at, let's go over to Palantir. Even though it's not in that Magnificent Seven, it's kind of Wall Street's most hated stock out there right now. But look at the pattern here. And this is a great overview of what's going on with the market. 50-day moving average is moving sideways, that green line, and that 20-day moving average, what I call the trader's trend line, is trading below. So 1 out of 2 here, not that great, with the 50-day moving sideways and the 20-day moving to the downside. Now, let's look at the big daddy, the one that everybody loves to watch, and that is NVIDIA, and note the stark difference in this price trend. 20-day moving average crossed below the 50-day moving average, but that 50-day moving average is now rolling over. And at this point, we're starting to test the opportunity or the chance that NVIDIA is going to continue with that trend and move down towards a 170. And the thing that I start to watch here is the 200-day moving average again. I'll explain why in just a couple of minutes, but this all backs up that view of the market when we take it back to the S&P 500, a market that is really waiting to make a decision. Since we hit earnings season last quarter, we had expectations that blew out actual numbers that blew out Wall Street's expectation. And at the same time, investors really didn't follow through. NVIDIA and Palantir being great examples of that. The headline stocks that come out and they beat expectations and raise their guidance, not getting any traction. Boil it down and look at the VIX and all of that stuff. You and I are just nervous. Coming towards the year end, geopolitical events are going on. Everything that's going on here domestically in the United States, outlook and AI bubbles and all of that. And here's the one thing you should write about AI bubbles. You have a piece of paper? I can wait for a second. We don't use pieces of paper anymore, do we? AI bubbles and other bubbles don't happen when everybody is expecting them. Let me repeat it. I said this with Ryan a couple weeks ago. Bubbles of any type. Thank you, JV. I do have a pen and paper, by the way. But bubbles don't happen typically when we're watching them. It would be extremely rare for the media, whether it's CNBC, whether it's NBC News, whether it is, I don't care who, along with investors at the same time, would uncover the exact point at which a bubble was occurring. It just doesn't happen. Our most famous example, Alan Greenspan, well, when he said irrational exuberance, it was years before we saw the dot-com bubble. Does that mean that the timeline isn't maybe squashed down? I believe it is. I believe we'll have one faster than when the Fed chairman just a couple of months ago started to hint that prices may be overdone and that we could be looking at a bubble. But this is one of those situations where even when you compress that timeline, I don't think we're there yet. But it doesn't mean that the current market conditions shouldn't be very cautious for you. And here's the one thing, as we're rolling into the 15-minute mark, here's the one thing that I think you need to continue to watch in terms of whether or not this market's going to go down or up 10%, maybe 15% or 20% as its next move. And it's Bitcoin. It's Bitcoin. I'm recalling when I said it's gold, Jerry, to Ryan just a couple of weeks ago. But it's Bitcoin is the number one thing that I'm watching. Why am I watching it? Because one of the rules, one of those commandments of trading that I have out there is that true traders, they're speculators. The market goes up because of speculation. And this is one of those that you'll want to write down right before we get into the technical analysis side. But stocks go higher because investors are speculative or they're feeling speculative. If I take $1, and I don't happen to have $1 with me right now, but if I take, forget about this. If I take a coin, $1, and put it on the table as an investor, I put it on because I'm speculating that I'm going to get $1.10 back, or maybe $1.15. I want this to come back worth more. I'm speculating that a higher price is going to be in the future, unless I'm buying puts on something or shorting a stock. I'll talk about shorting a stock in the very way off future. Don't do it. Buy puts instead. But if I stop speculating, or if the market stops speculating, that's when it's time for the hair on the back of your neck to stand up a little bit. And Bitcoin is that asset class out there that for a while we said, oh, it's a store of wealth and it's this and it's that. This is still a speculative instrument. Investors buy Bitcoin more so because they think the price is going to go higher than because they want to have a store of value. Let's face it. I've seen a couple of those cards out there that you can use to pay for something with Bitcoin right now. I don't think they're all the rage, maybe 5 or 10 years off. Until that day, you still have to look at Bitcoin as a speculative vehicle right now. And with those prices coming right back down to those lows that we saw just a couple of weeks ago, and notice that round number support that's kicking in right there. Bitcoin is the one that I am looking for, or I'm watching very closely right now and saying, if something happens and we break lower, this is the situation where we get that January sell-off that moves into a bottom where you could see a lot of stocks start to rally ahead of that earnings. A little buy the news, or buy the rumor type of situation. Doesn't mean everything's going to go down. Absolutely not. Absolutely not. It just means that you've got a headwind right now for the market. And when you match that with the uncertainty, it's a situation that I look at and say, I want to be a little more tactical with my positions right now. Let's talk about getting tactical. I mentioned that there are a couple trades I do want to, I'm going to piggyback. I actually sent Brian a message earlier, and I sent Nate something and said, hey, I want to talk about these trades, if that's all right with you guys, because it gives a good example of opportunities, even in a market like this right now. And obviously, that's why we're here at MTA. That is absolutely, doesn't matter which room you're going in to get your trade recommendations. This is why we're here. Let's look first at something that came across email yesterday. And no, let's look at what came across this morning. And I sent Brian something and said, I love this trade. I forget the exact. I usually say I love this trade. Oh, I do. I said I love the bounce after the Google news. So if you missed the news yesterday, Google came out and kind of shot a bow across shot a shot, put a shot across the bow of Zillow and what used to be Redfin, which is now Rocket, RKT. If you remember, Rocket Companies bought Redfin last year, or earlier this year rather. But fired a shot across their bow when they started to say, hey, we think we're going to start getting into advertising houses for sale. And it's something that should shake those businesses to their fundamental core right now. They'll still figure out a way to get out of it. But nonetheless, that's something way out there. What we're talking about, this starts to get into our discussion a little bit on technical analysis. What we're talking about here is an opportunity to take advantage. I've got to put them on so I can see the smaller scales here. Take advantage of price movement. And that's what technical analysis is all about. When you look at technical analysis, you're not looking at the earnings. You could look at a reaction to earnings. You're not looking at the change of CEOs. You're not looking at some comments or a headline, but you're looking to the market's reaction to those headlines or those earnings or the CEO changes or whatever's happening. And you're starting to look at it, I like to say, with math in mind. And that's what technical analysis is. It comes back to studying the market prices, using math, different applications of math, whether it's moving averages and trend lines, whether it's Bollinger Bands, which you see here with the pink lines, whatever the application is, it is studying the actual price. And I always like to say that we all know exactly what a stock is worth at 4 o'clock every single day. Every single day. So when you see that closing price at the end of the day, it gives you a baseline to move into the next day. And what we saw yesterday when we had that big news from Zillow or on Zillow from Google is a breakdown of the technicals here. Specifically, 3 of those lines I just talked about, the 50-day, the 200-day, and the 20-day. Notice how they've all been grouped here and they've been moving. It's because the stock has been moving sideways. Whenever you have this trio sitting here, all 3 of those trend lines sitting in one spot, it means that you've got a stock that I know Nate talks about quite a bit. It's kind of sprung down or compressed. That spring is ready to fire one direction or the other, right? Well, the directional move came off of that headline and pushed, in this case, Zillow, all the way down below that $70 level or towards the 70, down into the 60s, heading towards that 65 in the lows. And one thing that I'll have to scroll out for you to notice a little bit here. Let's do this. There we go. Notice this big bar, this huge bar, and it's red because it's selling. That is the volume that went off. I looked it up yesterday. This morning. 11 times in the last 5 years, you've seen Zillow move 8.5% or more to the downside. So let me say that one more time. In the last 5 years, Zillow, the stock, has seen a one-day move of 8.5%, and you were just a hair short of 8.5% yesterday, but 8.5% or more to the downside. So whenever we see moves like that, you're going to get a reaction from investors, and it's either I'm going to throw in the towel or I'm going to jump in and start buying. And what we've seen over the last 24 hours, including this morning, is that investors are coming in and saying, hey, this is overdone. There are a number of ways that you can gauge that. You can look at RSIs. It'll tell you, hey, the stock is technically oversold. Or you can simply look at that volume price move. When we see that huge downside price move combined with huge volume, and right now you're talking about 3 sigma or way out there on the standard deviations. Remember, we're talking math here. That's that signal that you could have an opportunity for the stock to at least have a little bit of a recovery, 4 or 5%. Right now, we're up 2.3%. The stock was up a little bit more. Loved it when I saw this trade this morning, taking advantage of that mispricing, if you will, or that knee-jerk reaction, that fear, going back to that sentiment side of looking and buying when everybody's selling. Well, guess what? Everybody was selling yesterday, and it's an opportunity over that short term to grab a little bit of a bump. And the magnet, from what Brian is seeing and I'm seeing, is at 74 to 75 is where that range starts to attract the stock right back up to where the stock has been compressing here. So loved looking at this. I thought it would be a great example of what technical analysis, or how technical analysis can present opportunities. Who knows? 3 or 4 days from now, we may look at this and give it another term and call it a dead cat bounce. I'm sorry to all the cat owners out there, and I'm sure there are plenty of you. But right now, with that price coming down the way it did yesterday, almost at 8.5%, and always take a look at what's happened historically whenever something like that happens. Anything that is unusual in pricing means that sometimes it's not going to follow the rules, right? Because that's, again, how we get into testing the math here. But in this opportunity, we break above 70, head towards that 74, 75. A cool little trade that, again, paying attention to what's going on. Let me look at another one here. And this comes from, I saw this actually from Nate yesterday. And this is, anybody who's seen me enough knows 2 things about Tesla. Number one, I never short the stock. It's so hard to short Tesla because you're shorting Elon Musk. And maybe that rule has gotten a little, brown with age. It's no longer green. Maybe that rule, it's got its exceptions now, let's just say. But over the long haul, it's always been wise to consider who you're betting against. But at the same time, Tesla is just one of those companies that is so, especially now, charged with emotion and sentiment. Thanks, Brian. Charged with emotion and sentiment and everything that goes on with the company. But right now, when I look at this, this is one of those trades that, again, applying that simple technical analysis, and I'm going to give you the 50-day rule in just a second, but applying that simple technical analysis here, that 50-day moving average is remaining bullish on the stock. Notice the support that we had right here as the stock was trying to break right back down again, and the velocity and volatility that happened after we broke through that 20-day and this very, very nice consolidation here. One of these days, we're going to talk about Bollinger Bands. They are a great tool. Ford actually just dropped. Yeah, you're right. Last night, they dropped the F-150, but what they didn't drop are the battery plants that they're building. They know that there's a place for all those batteries. It's probably going to be hybrid for Ford. But yeah, they dropped the F-150 Lightning. Actually made fun of my neighbor when he bought one last year. It's a cool truck, though. Nonetheless, let's get back to what I was looking at with this when I was looking at Nate's trade. And this came last night as a little bit of an overnight trade. He was looking for, prices to continue higher. Monty, we'll get you in, don't worry, in terms of giving you some basic education on options here. And obviously, you can get more advanced expertise from the tacticians. Anyhow, why in the world would I like this particular trade or think that this is a cool trade? Well, when I saw it as a little bit of a holdover for Nate, it comes down to 2 things here. First of all, I already mentioned the consolidation, and notice we had a short one here. But we start to break back above that 470 level. 470, if you look at it, has had a lot of resistance for the stock here. 3 times in the past 3 months, we've seen Tesla stall out, pun intended, at that 470 level. What is different now? Well, we've got that 20-day moving average. Remember what I said about the trader's trend line? That 20-day moving average, along with increases in volume like this, tells me that, hey, from a short-term trading perspective, the market, the traders in the market, the real speculators are starting to get on board with Tesla. And when we're breaking or pushing up against that 470 level and that top Bollinger Band, that's when I really start to like this as a breakout candidate. I start to say 470, we break up, start to see 473, 474. Remember what I said about shorting Elon Musk? Well, there are a lot more people that have been doing it here lately. And at the same time, if it starts breaking above 470, what do they have to do? They have to run and cover their butts. So the reason I like this as that overnight hold trade, that 475 level, which has been holding off as strong resistance. Sorry about it was 475. 470 has been holding, as you can see right in here. But that 475 gives you a breakaway up to that 500, maybe even, let's call it 10% move, 10% move up towards that 415 or 515 or so. And who knows if it's going to go higher. But again, taking advantage of those momentary breaks in the numbers here. Oh, I hope I don't know what I'm going to try not to look at the chat the entire time because I'll try solving every different every problem that's in there. All right, so that is my little take on what's going on with Nate's and trying to apply some technical analysis. Let's real quickly wipe the slate. We got a couple of the example trades through 11:30 right now, and things I do want to give us 15 minutes on the back end here for questions. Yeah, we'll look at a couple charts like CCL. We'll look at the BBY chart that I wrote up last week for trade of the week. But real quick, let's talk about technical analysis and why, because that is what we're supposed to talk about during today's session. So I've already given you a hint at what technical analysis is. It's the study of numbers, right? It is simply put, applying math to prices and trying to find certain applications of math that are going to be effective for your trading style. And the way I say is, man, I can't, the application. If you think about, first of all, the number of different technical analysis indicators that are out there, they number in the hundreds. Now, when you put together every derivation of technical analysis, so in other words, I've been talking about the 10 and 50-day moving average, right? Those are derivations. You can go down to, let's stop sharing for a second, and let's just talk one-on-one about this. So I can have a 10, 15, 20, 50, 200-day moving average, a 15-day moving average, whatever. I can have a 1.5 standard deviation on a 20-day window, a 2 standard deviation on 20 days, which is what's normally applied. Get it? I can make any type of adjustments, turn the knobs, put length of time into the indicator, and change the view of what it's telling me. That in and of itself has a problem. As much as technical analysis is the study of price activity, moving averages, et cetera, it is also a true study in the market's behavior to that analysis. And what I mean by that is the 20 and the 50-day moving average. Those are commonly known. Most of the people in the chat would probably agree. They're probably using them. 200-day moving average. Even if you get into watching a 5 or a 10-minute chart, they call them units at that point. The 20-unit moving average, the 50-unit moving average. All of those things are going to come into play and work because everyone else is watching them. So what I mean by that is you can be watching the 80-day moving average. And once, this is a true story, I did a study on the 81-day moving average for someone. They had to have it done and tell me whether it was a good indicator. And I came back with no. Well, let's increase it to 88-day moving average. I came back again and said, no, it doesn't work, which tells you the reason why technical analysis works. you have to have enough people watching that same indicator so that the reaction of the market is a reaction to that indicator. Thus, the 50-day moving average, one of the most widely watched, along with the 200-day, very effective in determining support and resistance for a stock or the market itself. But the minute you get away from that, and a lot of people will start to adjust those back days and forward days, et cetera, et cetera, et cetera. It's the difference between a simple moving average and an exponential moving average and all of these. Once you start to get away from the rest of the crowd, your technical analysis indicator is usually going to become less effective. So keep that in mind when you're using technical analysis. Any indicator out there, I don't care if you have the perfect indicator, is going to have its flaws. It has to, because the market and market prices have flaws. So always keep that in mind. It's not the indicator that's broken. It's that the market is doing something that can't be taken into account or can't be absorbed and factored in to how that technical analysis indicator or other should be working. They're anomalies. We can write them off as whatever. When the VIX hits 80, nobody's seen it before, right? Do you throw it out because the VIX has never hit 80 before when it did? No. You try to take it into account of what's going on in the rest of the market and then use it as that indicator or as it was meant to be used. I hope I'm not losing anybody when I say that. I always like to give that as a little bit of a backdrop. Now let's look at the three that I use. And I've already given you almost the entire set of keys to what I'm watching. But let's go right back in and look at that screen. So we've got Tesla up here. Let's take a look at NVIDIA because you know what? Let's skip forward. I already told you I'd look at Best Buy because I wrote about this last week. Let's give you the technical look at Best Buy. What I did last week was a little bit of an application of my approach, which is one of the things I call a walk down Main Street. It's simply being aware of what's going on around you. If more people are driving a certain car or if more people are using a certain computer, I usually like to take that account whenever I'm taking the fundamental picture. I happened to go shopping a week and a half ago, noticed that a lot of the stores were empty and kind of sat there and asked myself, why? What's going on? Well, that turned into a little bit of a walk down Main Street when I did go to the Best Buy and it was empty. Started to put together the fundamental picture right now. Higher prices are coming, et cetera, et cetera. You can get the full story, obviously, up at the website. But the chart came into play here with Best Buy. And you've got the chart. Let me make sure we're right there at the most current date. Couple of different things that are going into play on this view of Best Buy. What you're looking at is a daily chart. It has the 50-day, it has the 20-day, and it has the 200-day. The blue, the green is a 50, and that 20-day is your red indicator there. These are simple moving averages. The last 20 days, the last 50 days, the last 200 days worth of prices. That's it. Everybody asks me, should I use EMAs? Should I use those exponentials? It's, again, your choice. You're putting together a suite of technical analysis indicators that give you your unique view. Just keep in mind that rule that you want to have the majority of the market. Maybe an EMA gets you a little bit ahead of what the rest of the market is doing because everyone's looking at a simple. If you've used that effectively, then don't let this stop you. But nonetheless, I've always kept it simple. That's a motto you're going to find me writing about all over the place. Within this one chart that we see here, over the last couple of days especially, let's bring this in and close the range down a little bit. What you've got on a 6-month view here is a 50-day moving average that has gone negative. Now, I told you that I would give you my little secret. Hey, I was just in Sarasota, doctor, literally 2 weeks ago. Anyhow, my 50-day rule, and here it is. And it's about as simple as it gets. The 50-day moving average is, in my opinion, the absolute best friend of any trader or longer-term investor. It's the one indicator that is a part of every bit of my analysis. And it goes back to a study that I did 15, 20 years ago on the S&P 500 companies individually. What I did was I took the 50-day moving average, wrote an algorithm that basically said, is this trend line moving higher or lower? It's as simple as this. It literally returned a 1 or a -1. If it was a 0, it meant that it was trading sideways. You don't find that too often. The look back period was over 20 days, and it looked at the 5, the 10, the 15, and the 20 day to come up with that view of whether or not the slope was negative or positive. We're getting into the weeds with that, but what came out of that analysis was pretty amazing. If you've got a 50-day moving average that is trending higher, like this is happening, the general rule that can be applied here is that you've got a 2 to 3 chance that the stock is going to close higher the next day. That's it. And this is one that you should write down and have on a Post-it note. If you've got a 50-day moving average that is trading higher, trending higher, and that's over a 20-day look back, but really the last 5 days are the ones that are key. That simple rule gives you better than Vegas odds. You've got a 2/3 chance a stock is going to close higher. This is a little more valuable to somebody who's going to hold a stock for 4 or 6 months, let's say. Usually the cycle is somewhere in 2 to 3 months or so. And you can see in Best Buy's case, you've got a couple of cycles here. But when that rolls over, the exact same opposite is in effect, which is one of those things whenever you're testing an indicator you want to see. What if it's going the other direction? Is it going to give me the same results? And it does. It's about a 65% chance. When that's rolling lower, when the 50-day is moving lower, about a 65% chance that you're going to see the stock close lower the next day, as long as that trend is in place. So there's number one mark against Best Buy. We've traded below the 50-day moving average as well. 20-day moving average on Best Buy has crossed below that 50-day. For the traders out there, the shorter term traders, it's not, you've got a gold cross, obviously a silver cross. I call this the flesh wound cross whenever we move. And that death cross is when the 50-day goes below the 200-day. But positive momentum turns into negative momentum. And this is actually an earnings announcement. The stock couldn't hold the gains after that. A big sign of sentiment there. And now we're cracking right along that $72.50 level, with 70 in play in that 200-day. This is a stock that I'm looking right now for it to add down to $60 as a result. And if you check out the article, you'll actually get a little bit of a way on how I've traded this using some longer term options. But this is technical analysis, in my opinion, a great example of it in play from a couple different dimensions. That negative momentum, you've got the 50-day moving average rolling over. It's giving me a 4 to 6 week, maybe out to 2 to 3 months or so, negative outlook on the stock. And then what I call all different types of things, a trapdoor price, a trigger price, whatever, at that $70 level. And if we break down, we move even lower. Let's take a real quickly. I'm going to do something that is going to be out of the box here. And I'm going to try to take a ticker symbol from the chat and see if I can apply. Time frame of this chart right now, DJ, this is what you're looking at is a daily, open, high, low, close, obviously. And this is looking at 6 months. One of the interesting things I noticed when we look, let's go back to that Tesla for just a second, because this will bring in Nate. Nate's thinking, and Nate, when I spent my session with him last week, and I can see some charts going off here, Cubes is going to be a good one here. Let's look at this, because this shows you a little bit of how that daily can cross over into the intraday. So I spent some time with Nate. Check out the replay. It's up on our new YouTube channel. By the way, if you haven't gone to the new YouTube channel, get over there, check it out, like, subscribe, do all of the things. We're going to be putting a lot more educational content up there. All kinds of good videos are going to be going up there. But when I look at this chart, I see one thing here. And that is, let me go over here. Let's put Tesla in here. Same platform, stock charts, different chart. It's their non-interactive version of it. So here's your daily view. And this is me looking at Tesla. And as somebody who trades with a 4 to 6 week outlook or so, I look at these little periods and I get very, very interested right in here, right in here. And the one thing that is, common about these is that notice how the bandwidth here, the Bollinger bandwidth, it gets tight. And this goes to that idea of traders love volatility. Well, if you look down here, and this is the reason I brought this chart up, the Bollinger Band width has now showed you that it's tightened up. And what that means is that you've got a stock that is normally very volatile with Tesla. But you get these periods where the bands start to get really, really tight and you're pinching down the price of the stock. And when that happens, it's like, I use this analogy with Nate. It's like pushing the beach ball underwater at the beach or whatever, coiling up a spring. And eventually it's got to go. And it's just a case of putting a directional on it. And in this case, we had a break above that 50-day moving average. You can notice that 50-day was turning bullish. We had a Bollinger Band that tightened up. Same thing happened here. This one was a little harder because you had a bullish 50-day, but your 20-day was rolling over. Bottom line is, if you can find these situations where volatility is not yet hit a stock, but forecasted, they're gold. Let's look at Nate's. Look at a 5-minute here. So when he brings up that he's got a carryover trade on Tesla yesterday, I looked at it and on the daily chart saw a tightening of that band, right? But look at how Tesla has just been trading sideways. So I absolutely get the same idea here on an intraday chart working. You just have to be a little bit faster. But love, again, this setup right now with Tesla just almost sidelining, just absolutely going horizontal. In some cases, this is where volatility can be hated by the trader because you want the movement, but also for those willing to sit around and wait and position correctly when you do get the volatility. When it returns to normal volatility, which is not where it is right now, that's where you get paid. All right, let me go and grab. Yeah, I am using, just so you guys, and I'll try to make sure I give a little more about what I use in terms of a setup, but I am using stock charts. They've got two different versions. They've got their interactive version, which I like when I'm on the fly here, but they also have their old school version, which just gives you the charts and they're a little more static. You can't draw on them. For some reason, I go back to this. One of the reasons is my two favorite indicators are on here, and they are this, and this goes back to what we were talking about in the beginning. What you've got is a picture of the number of stocks above their 50-day moving average in the NASDAQ 100. That's all this is. So as it goes down, you've got stocks moving below their 50-day moving average. This is a great indicator because it tells you when you're, from a momentum perspective, where you're overbought and oversold. You simply avoid the market whenever you've got 95% or 93% of the NASDAQ 100 above their 50-day moving average. It's stretched to its fullest. Same thing with the S&P 500. But notice right now on both of those, we're kind of fluctuating right at that 50%, 60% level. Nobody wants to push anything too far right now. Anyhow, on my setup, I use both versions of stock charts, and my standard version is always going to have the 50, 20, 200-day moving average with the volume, an RSI at the bottom. This is where I break free from everybody. In the case of using an RSI, everybody either defaults to a 10 or a 14-day RSI. I use a 20-day RSI because it matches up to the 20-day moving average that I'm watching. So I'm a little different than that, and I have gone and done some back testing to make sure that I'm not on the wrong side, if you will, by doing that. You can draw on the ACP version of stock charts. Stock charts is also, I've been using it for 20-some years now, very reasonable in terms of the pricing, and a lot of cool little features. You can get option montages, etc. All right. So I've explained a little bit of technical analysis now. The reason you want to watch technical analysis and what you want to watch in technical analysis depends on what the market is watching. It's not just your view. If you want to be independent and put in all these crazy indicators, that's great. It's going to be less effective. The efficacy, if you will, of technical analysis is that you're capturing what the rest of the market is watching. At the same time, trying to make the combination that fits your trading ability or your trading skills, that gives you just a little bit of the edge. And remember, there is no perfect indicator. There's no perfect setup. There's no perfect anything. It's just how you use it that gives you that edge, and how you get information from others, myself, Karim, Nate, everybody out there. And make sure that you've got filters up on that. Also make sure, I've only mentioned it once now, I believe, that you sign up for the trading challenge, the holiday trading challenge. You get to watch Nate for 3 days, which is cool. You get to look over his shoulders for 3 days and listen to the soothing tone of Nate Bear talking to you as he's watching Tesla or something. And believe me, it is kind of soothing to talk to Nate. So make sure that you sign up for the chat. Steven just dropped another link, or not the chat. He just dropped another link in the chat. All right. Missed it. If anyone knows Bollinger Bands, I'm going to try to take a couple, because we're down to 12 minutes now. I'm going to try to take a couple of questions here, and we can do technical analysis. We can do what kind of car do you drive, literally a little bit of a ask me anything. Hope that we've kind of filled up to, I just saw a great question here, actually. Any changes to the BBY trade minimizing the initial cost? No. And the reason I say no so sternly or so decisively or so, I think that everybody here at MTA would share the same opinion. When I'm looking at a trade setup, whether it be an investment, whether it be a trade, and I categorize trades as something that goes 4 to 6 days in my case, you can have something that is traded up to 2 to 4 hours, 2 to 4 minutes. Your window of how long you're holding depends upon your gauge of success. In my case, it's a little bit longer here. I like to have a trend play out for me. The reason that I kind of strike on the changing the value of the BBY or making it less expensive is that when I look at a trade, I don't try to find the cheapest way to trade it. If I wanted to do that, I could trade an option that expired in 2 weeks or 3 weeks on Best Buy. What I tend to do, and especially when you look at Best Buy specifically, you've got all kinds of things that can happen between now and, let's say, the end of January. You've got December expiration coming up in 2 days. A lot could happen between now and the next 2 days. It could break down below that $70 because they could come out with a report that, yeah, their store traffic is very low and they're getting their pants beat off by Walmart, Costco, and everybody else. And the stock's down at 67.5 or $60, let's call it. And all of a sudden I could be kicking myself saying, hey, I didn't buy an option that expired at the end of this week, a December XP option. Or I could have that time value that allows me to be, let's say, less correct on a tactical perspective and more correct on where I see the stock going over the next month or two. For that reason, I tend to go ahead and pay for a little more premium, pay it up. And when I get that move, I tend to allow it to run at that point. I have leaps that I buy that are expiring in 2027, and I'll start to buy them for 2028. That's a great view of letting that trend play out on some of these stocks. So I tend to stay away from worrying about the expense of an option, except for I always use the option calculator to figure out whether or not the market's charging too much. And you can go to a number of different, the OCC, the OIC has a great options calculator. They're out there, a dime a dozen, Black-Scholes. Make sure you put in all the inputs and then figure out what the option should be priced at and put your order in and boom, walk away. Don't pay up for it unless you're willing to pay for a little bit of extra volatility. I also tell people, and this comes up in the gold article that I wrote, and I'm sorry to go so long on this one question, but if you look at the bid-ask spread on anything that you're trading, that's going to be your first indication on whether or not you're paying too much or that option's too expensive. Look at the option prices on GLD. They're the smallest bid-ask spread when you go out to June or July expiration, and that's because they don't have any company-specific risk. So the bid-ask spread is the first thing that you'll look at. Outside of that, I always go to the option calculator, and I always ask myself, Should I be buying an option that expires in a month, or should I just play out for 3 months? Usually the latter is the case. All right. Yes, I went out to March of 2026. So I've got an earning cycle that'll be coming. I've got a lot of things that could play out. Hopefully this plays out in the next 2 weeks. So, all right, I'm going to take some of the questions right now. The soothing voice of money mornings. Yes, Wendy. Thank you. Great question, infamous Ari. What technical analysis do you use to determine when to exit a trade? So let's look at that Best Buy, because that's going to be the question that's right there in front of everybody. We've just talked about Best Buy. $75 is the number for me right now. It's round number. Round numbers always have, especially if it's more widely trade stock, an impact. If I break above 75, next thing that everybody's going to look at is the $80 level. It also gets me above the 20-day moving average, that trader's trend line. So if I break above that $75 right now on Best Buy, I'm going to be looking for the door on that March position. If I break down below the 200-day moving average, which I'm forecasting, I'm going to give that a little bit of latitude. But when we start to break back up and realize that there's going to be some volatility at the 200-day, but I always use a moving average such as the 20-day, or when it's a little better placed, the 50-day moving average as that closeout. Use the technical analysis on the underlying. A lot of people use you can use a stop loss on the option, and you can do that with some platforms where you can actually save them as part of the setup. But remember, especially with those big, the large big ass or bid ass spreads, you might get triggered because somebody bought or sold an option based on which side you're on, and those spreads are so wide, using a trailing stop. All right. So yes, to technical analysis. Do I ever sell options? I sell puts. I do sell calls every once in a while. When we get into options 101, I'll tell the story about one of the firms here in Cincinnati trying to hire me to generate income on their portfolio. And being in Cincinnati, they own tons and tons and tons of Procter & Gamble. And I said, we'll simply sell puts and calls. And they didn't know how to do this. This is a place with a lot of money under management. They didn't know how to do that. So we did a little bit of a lesson on that, and I put myself out of a job. But yes, I will sell puts more often than I sell calls. I don't like to get a stock called away from me, and it's not taxing. It's just, if I'm holding it because I believe it's going to go up. And why write a call, even if I'm going to get an extra 3 or 4% out of it? Why write a call that's going to take the stock away from me and I just have to go back and buy it again? Maybe I get a dip, but what if it runs out of control? I don't like to take that away from myself. Selling puts, love the strategy, name your price, collect some premium. Again, we'll get into that as we get into options 101. I don't want to get into any of the two. And we got, somebody used they used number sign nuclear stocks instead of asterisk. But we'll go ahead and look at a couple of the nuclear stocks. This is a great lesson in why the market's not retaining any strength right now. Remember what I said at the beginning. Speculation. Markets go higher. Prices go higher because of speculation. So if we keep that in mind alone, somebody brought up the nuclear stocks, and we have this thing, and you'll see a report soon that'll be available. But I like to call it the Speculative 7. You can call it a number of different things. If you look at the stocks, let's look at SMR. These stocks went through a period over the summer where some of them doubled. Some went up 30%, some went up 40%. If you look at OKLO, my goodness, OKLO went up 200+%, right? This is at the heart of the nuclear movement. And if you're not familiar with the nuclear movement, this is being pushed by the need for power for AI centers. Right now we're starting to see, or the data centers, AI data centers. And in a perfect world that's being developed by these companies, and it's not perfect because you still have to do away with, the waste and such, but such is the case with so many things. In a perfect world, you'd have a nuclear reactor that you could drop next to a new data center, and it would power that data center with minimal infrastructure from existing energy centers, hydro, et cetera, and be able to do that somewhat cleanly. OKLO is one of the biggest names there. Speculation. These are companies that don't make money right now. They're in their development stage, and I always point that out. SMR is another one. Development. You're not going to see earnings per share. You're not going to see meaningful revenue on these companies. What you're going to see is them moving forward with their ideas so they can get it to market. Nano Nuclear Energy is the other one, NNE. And the reason I said these are a perfect example of what the market's going through right now is in each one of these cases, you see this huge hump. And I can pull this up with some of the quantum computing stocks. Notice, same timeline, same hump, completely different industry. This is the speculation going away from the market. And when that speculation goes away from the market, it affects the S&P 500. It affects the NASDAQ 100. So right now, when you bring up nuclear stocks and say, hey, what's going on with them? They have simply gone out of that speculation phase. And now we're in danger of them digging a little deeper. What else is coming out of that speculation phase? Well, we started it when I said, this is the one indicator that I'm watching the closest. Bitcoin, the slope or that hump doesn't match up. But notice that Bitcoin, also a speculative asset, is doing the same thing. So right now, to answer what I think was your question, what do I think about nuclear stocks? And I'll put the same thing on the quantum stocks. And there are a few other groups out there. We need to see speculation return to the market. And that's going to happen when some of the uncertainty in the market starts to go away. When it does, these are going to be the groups that are going to fly by everybody else, including the Mag 7 stocks. All right, SMR, none of them have revenue, guys. None of them have. It was not Matson money. No, it was not. Actually, it was a company that shares some sort of namesake with me, although they're not the same people. BBY options chain, low volume, low liquidity. Yep, that is the case you're going to find with some of those companies. Best Buy, actually, the majority of the companies that aren't in the top 20, let's say NASDAQ 100 and S&P 500, are going to see drop-offs in strike. So keep that in mind. One last chart to look at, and that is, I'm surprised somebody didn't say somebody else, let's say in the AI space, that just brought out their earnings. Anyhow, Meta, look at this. This is a textbook for you guys. Piece of cake for us to read. 50-day turned negative here. Look at that. Stock was still trading up around 750, a bad earnings report. Technicals have nothing to do with the earnings, except they'll continue to follow that trend. 50-day moving average continues lower. Now you're running into some resistance, but right there is that thing I just referred to earlier. It's called a death cross, 4 to 6, usually 3 to 6 months. But you can bump it up to 4 to 6 months. You're still seeing stocks suffer when they go through a death cross. It just means that long-term momentum has shifted against it. Volume is dropping off on the stock as well. You know what? I leave Meta up to you. GSAT, we don't have time to go through. I'll hit it next week. But very important stock if you look at what might be happening here with Tesla / Starlink. We might see a big, exciting IPO in 2026 if you look at some of the headlines, and it's going to have an effect on GSAT. With that, I'm going to go ahead and shut it down. I'm going to be about 1 minute over. I'm going to thank everybody for their time. I'll be back here next week. I think we'll make sure that we get the time and date. Obviously, the holidays kind of shuffling around. Don't forget to sign up for the trading challenge, the holiday trading challenge. We'll have one more link in the chat here, I'm sure, in just a second. But take your opportunity not only to watch over Nate's shoulder and listen to his soothing voice, but also take a shot at winning some of those prizes that are out there for everybody to grab. All you have to do is hit the link that is right there in the chat, and it'll take you right to the page. Go down, hit the button, email address, and you're in. I'm going to be writing about some of the winners and what they're trading here over the next week or so. It's going to be fun. I'm looking forward to next week as well. Everybody, as I always say, I hope you have a great week, and I wish you the best trading success.